Hello folks, Raj Sastry from Raja Option Trading. Today we will talk about my favorite software infrastructure stocks. With that, let's look at some of the famous quotes from a few folks. First one is, software is eating the world, but services, meaning software as a service, are eating the software. So true. With the recurring revenue stream, software as a service is really the king. This is from Mark Andreessen. He was one of the famous Netscape co-founder. Next is software ate the world, but now AI, which is artificial intelligence, is eating the software. It's from Forbes. Clearly, software is the name of the game. Hardware is really becoming commodity. Software is where the intelligence is. So if you want to differentiate your product and if you want recurring revenue stream, software and software service and artificial intelligence is the way of the game. So with that, let's look at few of these companies and see why they make sense. So these are few companies in the software area, top performing companies. First one is Veritone, stock symbol VERI, about $47, which is not too expensive. Next is Cloudflare, ticker NET, about $85. Appian Corporation, CrowdStrike, Zscaler, Square, SailPoint, MongoDB, Bandwidth Five9, Varonis, Okta, BlackLine, VirnetX, WIX, GDS Holdings, SPS Commerce, Synopsys, PagSeguro Digital. So the ones in the bold are my favorites, especially because they've been doing very well from a growth, revenue, and also from a gross margin perspective. With that, let's look at a quick snapshot of these companies and take it from there. So first is Veritone. Veritone created world's first operating system for artificial intelligence. And their CEO has got about 58% approval rate. Stock market cap is about 1.49 billion. And as you can see here, stock has been performing very, very well last couple months, and it's about $47 now. They got about $54 million cash and no debt, which is very good. And from a market cap perspective, it's a small cap company, as you can see, consistently growing the market cap. They almost doubled their market cap in a quick like 4 quarters, and now they even more than doubled again. So clearly shows they are taking the market share and doing very well. And from a revenue perspective, impressive revenue growth, year-over-year revenue growth, and they had one negative revenue growth, but for most part, they've been doing very well from a revenue growth perspective. And they've been surprising the Wall Street from a revenue perspective, with the exception of 331, probably coronavirus outbreak around that time. From an EPS perspective, also they did very well. They've been surprising the Wall Street with the positive surprise. And gross margin is very consistent, about 62 to 71, very typical of a software company. And from a net margin perspective, they're still not making money. They're negative net margin, which is understandable because they're investing in the business and their software. So with that, given it's a low stock price, given stock is doing very well and a low market cap, I would recommend Veritone, and you can buy it and keep it for a long time. Next is Cloudflare, or NET is the ticker symbol. It's really a very good company. They are into mission to build a better internet, and they work with 10% of the Fortune 1000 customers, which is a very good sign. And 94% approve the co-founder and CEO Matthew Prince. It's always good to see a co-founder at the helm, which is the case here. And from a cash perspective, they got about $1.03 billion cash and $428.3 million debt, which is a good ratio to have. and stock price is at 85, and it's a little bit recently minted company, and stock price is consistently going up, which is a very good sign. And from a market cap perspective, they've been grabbing the market share, as you can see here, consistently growing market cap from quarter over quarter, and now they're at $26 billion, which is very impressive. And from a revenue perspective, they've been improving the revenue at a clip of 47 to 54%, which is very, very impressive. And they've been surprising the Wall Street with a positive revenue surprise all along. And from an EPS perspective, they are positive EPS, consistently surprising last 3 quarters, and previous 2 they have been negatively surprising, which is not that great. From a gross margin perspective, very, very impressive, 76% gross margin in the last quarter, and all the way it's high 70s gross margin, which is very good. From a net margin perspective, they're in negative, which is understandable. Newer company investing heavily into the business, R&D, and growing their business. So with that, clearly, I recommend this company for your long-term portfolio. Very good company. It can grow very well. So next is Five9, about $11.88 billion company, clearly a leader in the contact center market, and they have disruptive business practice. They're doing really very, very well, and they got 99% approval rate for their CEO. Rowan Trolp is a very seasoned CEO here, and stock is consistently growing up in a 3-year chart, as you can see here, very steady eddy, and they have about $780 million cash, and long-term debt is about $656 million. Stock price is at 181, which is very good. It's really going at a positive clip, and they're clearly grabbing the market share from their competitors. You can see the market cap is increasing rapidly, and now they're at $11 billion, which is very good. And from a revenue perspective, they're growing the revenue year over year very nicely. Now they're at 33.87 clip, and they're surprising the Wall Street positively on the revenue front. EPS is also, they are growing, is a positive EPS, consistently surprising the Wall Street. Gross margin is, high 50s, which is very nice, consistently, positive, double digit, high 50 gross margin, which is very, very nice. And net margin is negative, very, very, consistent with the growing companies. They want to invest in their own companies and make it better. So with that, I recommend Five9 for your portfolio. Next, we'll look at next 3 companies. First is APPN, about $25 billion company. They provide business process management or BPM solution. They are clearly a no-code type solution. If you are a business owner and you don't want to write code, or even a business analyst, you can really use their platform and look at your business process, improve them, and gain some insight on them. 83% approved, co-founder and CEO Matt. Stock price is about 223. They got $251 million cash, $360 million debt, and stock price, as you can see here, has done very well, especially in last quarter. I would wait a little bit for this to cool off, then I would buy. Or if you want to buy a little bit, you could do that too, as just to track how it's doing, and then you can add more when it pulls back a little bit. And from a market cap perspective, they've been as you can see here, these 2 quarters, 1231, 331, they've been at the same market cap, but something changed, after 930. From 930, they were at 4.5 billion. Now they're at 25 billion. That's this tremendous growth in the stock price that increased their market cap more than 6 times, which is very impressive. That's why you might want to have it cool off a little bit and then buy. And they got year over year growth of 11%. They're not that very consistent, as you can see here, 13%, 32% negative. Now they're into 11%. So I would watch out a little bit. They've been surprising the Wall Street with the revenue positively, except for one quarter here. And positive EPS surprise all along, and very good gross margin, and they're still not making profit yet. The profit margin is negative, which is understandable for a growing company or a like smaller company. So with that, I would watch this company. Probably I will not invest too much. I would invest a little bit and see how it is going. Buy more on the pullback. Next is MongoDB, MDB, $25.48 billion company. This is really the cloud database, horizontally scaling, and a lot of the developers I know, they love MongoDB, especially with their e-commerce type platforms. 98% approved CEO dev, and stock price is at 422. They got $966.3 million cash, and long-term debt is around $1.5 billion. Stock prices, as you can see, are consistently making its way up. They got some bumps along the road, good time to add more, and very solid stock. And from a market cap perspective, as you can see, are consistently growing the market cap. Now they're at $25 billion, very good market cap growth. This clearly shows they're grabbing the market share from traditional players like Oracle or any of these RDBMS type players. So with that, revenue is impressively growing with a clip of 30 to 40%, which is very nice. And they've been surprising the Wall Street with the positive surprise on the revenue side. EPS is negative, as you can see here, but they're surprising on the EPS front. And gross margin is very impressive, 69, 71, 70, very impressive gross margin. And net margin is negative, especially because they're still investing in their platform and making it very nice for the developers. I feel this company may be ripe for acquisition. Bigger players like Oracle, Microsoft, or even Salesforce, they might look at this as a acquisition candidate. That's my hunch, but it's a very good company to buy long term. Next is CrowdStrike, CRWD. Clearly a very good cybersecurity leader. They provide the endpoint protection platform, and they offer Falcon platform, which is really a SaaS business. So with that $53.57 billion company, 98% approved co-founder CEO George Kurtz. It really shows the employees really approve the CEO at a very high percentage, which is very good to know. It's recently minted IPO, as you can see here, not too much history, but stock has been doing very well. This is also backed by companies like Google. So with that, they've been consistently improving their market cap, as you can see here, and now they're at $53 billion company, and they've been surprising the Wall Street positively with the year over year revenue growth of 85, 84, 85, 89%, which is astronomical, very good. I don't know how they do it, but it's really good. And they've been surprising the Wall Street on the revenue side. They've been surprising Wall Street on the EPS side, and their gross margin is very nice, and they're still negative net margin, meaning they're not making the money at the end of the day, especially because they're investing in their platform and R&D. I would clearly recommend CrowdStrike for your portfolio. So with that, let's look at last set of three stocks and see why they make sense. First in this batch is Zscaler, ZS. It enables the world's leading organizations to securely transform their networks. They're into cloud first type world, completely ground up built. $53.57 billion company, 98% approved co-founder and CEO Jay Chowdhury. It's good to see a co-founder at the helm and a very good approval rate. They got about $1.42 billion cash and $927 million long-term debt. Stock price is 242. As you can see here, chart consistently going up very nicely, and last couple of quarters it has done tremendously well. And it's been grabbing the market share, as you can see here, 7.25, 8.74, 18.04, $53 billion. It's really mind-numbing growth here. They're clearly grabbing the market share from their rivals. And very good revenue growth. Now they're at 52.34% revenue growth year over year, consistently growing the trajectory here. And they've been surprising the Wall Street with the revenue surprise, and they're also surprising Wall Street with the EPS surprise. Very good gross margin, high 70s, and they're still not making the money because net margin is negative, mainly because they're investing in their own product, which is a good sign. I clearly recommend Zscaler for your portfolio, especially because cybersecurity is the name of the game going forward. Next is Square. Square is about $122 billion company. They've come a long way. They're really competing effectively with the traditional credit card companies and traditional banks. They provide, small and medium-sized businesses with Square Cash, Square Terminal, Square Payroll. They're a one-shop stop for any of these small business. And they got this impressive, legendary CEO and co-founder Jack Dorsey. He's got a good vision for the company. He's also investing in Bitcoin. 90% approved the CEO here. Stock price is about 272.75. Very, very impressive growth here from a chart perspective. And they got $2.88 billion cash. They got also $2.67 billion debt. And revenue growth, market cap growth, as you can see, very consistent, very nice. They almost very nice clip. They're improving their market cap. Clearly shows traditional players like Visa, like MasterCard, they can't compete effectively with these guys. These are newer generation type, companies. And impressive, very, very impressive year over year revenue growth. How can you see a 403% revenue growth year over year? It's very, very impressive. I don't know how they can put up this kind of number. Very impressive. And they're also surprising on the EPS side, with the exception of 331, probably the COVID scare. And very good gross margin, about 26, 31. I would even see a little bit better margin going forward, but so far they're doing well. And net margin is positive in the 930 quarter, which shows they are making money. I would recommend this company for your long-term portfolio, especially a co-founder CEO who has got a very good vision for the company. Next is SailPoint. SailPoint is into identity. They make identity governance solution, and about $5.75 billion company. Long way to grow, and 92% approved co-founder and CEO Mark McLean. And stock price is about 63.21. If you're conservative, if you don't want any high value stock, this could be your stock here, 63.21. They got about $483.72 million in cash and $360.73 million in long-term debt. Very nice stock chart here, a 3-year chart, growing very nicely. And from a market cap perspective, they've been doing very well, as you can see here. Very steady Eddie, I would say. From 3 point, it's really, right now they're at $5.75 billion. Very nice, slow and steady market cap growth. Clearly shows their strategy is working. They're grabbing market share from their rivals. And from a revenue perspective, impressive revenue growth, 10%, 25%, 24%, which is very nice. They're not like Square where you have astronomical revenue growth, but here they're very steady Eddie type revenue growth. And they've been surprising on the EPS front also to Wall Street. From a gross margin perspective, they're into high 79, high 80, low 80s, which is very good revenue gross margin. And from a net margin perspective, they turned positive here, which is really nice. That means they're making money here. So I would recommend SailPoint for your long-term portfolio, which is a very steady Eddie type stock. So with that, let's look at the analysis that went behind our selection of these companies. So this is our top list of all the highly performing software infrastructure stocks. The way to read this is really, it's sorted by performance in last 1 year on a descending order. The stock on top is clearly very highly performing stock, which is Veritone. We got all the way PagSeguro Digital, which is 79%. Still, really impressive performance. One thing I would point out, we looked at all these many of these companies in highlighted color, bold. Probably not all of them, but if you're really a contrarian, you could also look at lower price stocks like SOS Limited as an example. The company did not do anything for a long time, but now slowly they are improving. You could argue that this could be short squeeze, but I think it's a good player. And then you got UCO Inc. about 6.58 dollar, which is very low stock price. You could look at this as a contrarian play, especially they got good revenue growth and also double-digit gross margin. And you also got BlackBerry here. BlackBerry, it's good to trade in and out, low stock price. They also get into short squeeze once in a while. Next is Bridgeline here, low price, and the revenue growth is not impressive for me. So I would not recommend this. But if you want to just play around a little bit, you could do that too. Overall, I feel all these companies in bold are really nice. Even though I did not walk through all of them, you could buy any of these and tuck it away for a long time. So with that, next let's look at monthly performance of these companies. As you can see here, Veritone, very nice, performance on a monthly basis. They have some bumps in the road in the past, and same story. As you can see, all these companies, they have done very well, even though they had some bump along the way. Especially SOS, which is a very low dollar price stock. Off late, they've surged so much. This is short squeeze. I would not invest here. And APPN, as you can see, a number, they went up 121%. So which is really a little bit too much for me to handle. I would wait for it to cool off a little bit, then I would buy. With that, I think CrowdStrike that we talked about, clearly a very good company. Zscaler is very good. Square, very steady Eddie. SailPoint, very good stock. MongoDB, I think I like all of these companies for your portfolio. So with that, um, happy investing, and happy investing in the software stocks. Thank you very much. Happy trading. Bye.